What would happen if Michael Saylor, the most vocal Bitcoin advocate on the planet, suddenly decided to sell every single Bitcoin held by MicroStrategy? Would the price collapse? Would it mark the top of the cycle? Would you rush to sell your own stack in panic? Whenever Michael Saylor, MicroStrategy, or any other major holder makes a significant move, thousands of Bitcoin investors start sweating and asking the same fear-driven question. By the end of this video, you will stop asking what if Michael Saylor sells and start thinking like a second order investor, someone who stays calm and actually sees opportunity when big holders move. The mental model that I'm going to explain today is the second order thinking, heavily championed by Howard Marks. There are two ways to react when something happens. First order is Saylor sells, price drops, and I should sell too. The second order is Saylor sells, why, and then what happens after that, and who absorbs the supply and why. Most people wrongly believe if Michael Saylor or any big holder sells a large amount of Bitcoin, I should sell mine too, because it means the smart money is getting out. It feels logical and safe. It's exactly how retail gets shaken out cycle after cycle. Why that belief breaks down is because big holders selling in a first order event, what matters is the second order consequences. Better entries for patient buyers, more liquidity in the market, a maturing asset class is the signal that we need to see. As of July 2026, 843,000 Bitcoin are held by MicroStrategy or Strategy, acquired at an average price of roughly $66,000 to $75,000. The largest corporate Bitcoin holder and one of the most aggressive accumulators in the Bitcoin history. Despite long-term conviction, 3 sales have happened so far. In December 2022, the first sale happens when nobody knows about MicroStrategy or when nobody cares about Bitcoin. And they did so because of the tax loss harvesting strategy. In May 2026, 32 Bitcoin are sold to fund preferred stock dividends. And then again in July 2026, 3,588 Bitcoins are sold for treasury management purposes, which was their third and last sale. In context, they have totally sold 3,620 Bitcoins, which is roughly 0.4% of their total position. Short-term volatility has followed each sale, but the additional supply was observed quickly. Bitcoin has survived steeper drawdowns before. In 2011, 93% drop was there. In 2013 and 15, 85% drop was there. And in 2017-18, 84% drop was there. And 2022 cycle, 77% drop was there. And right now in this cycle, we have experienced about 50% drawdown. Large holders selling and forced liquidations have followed often a role in these declines. The pattern every time is first order thinking is panic and price collapse. And the second order outcome is coins move to stronger hands, leverage flushes out, higher prices follow. There are two signals that have held up most of the time that we need to pay attention. One is the 200-week moving average, a long-term support line. Major cycle bottoms have formed near or slightly below it, and prices have rarely stayed below for long. The Mayer multiple, the prices divided by 200-day moving average, readings below 1 have often marked attractive long-term accumulation zones. But most investors think, what if he really did sell everything? The initial impact would likely be negative and headlight driven. The second order consequences would be more Bitcoin flowing to ETFs, corporations, sovereign funds, and patient holders. A strong ownership structure will follow. But people still have objections. The number one objection is, but if Saylor sells, won't the confidence be destroyed? Short-term headlines will scream, but the confidence built on one-man action was never real confidence. True conviction comes from understanding the fundamentals and not from any single holder. The second objection is, what if he sells and the price never recovers? Bitcoin has survived far bigger shocks, the Mt. Gox liquidation, the China mining ban, major exchanges collapsing. Every time looking past, the panic has paid off. And the third objection is, I am not as smart as Saylor. Shouldn't I just follow him? His strategy is tailored to MicroStrategy's balance sheet, debt, and goals, and yours is different. Evaluate these moves against your own time horizon and risk tolerance and not someone else's actions. So the real question isn't whether Michael Saylor sells. The real question is whether you have a personal Bitcoin strategy independent of any single person's decision. First order is always seeing the dangers. The second order always looks for what comes next. If you want to move from reactive fear to calm second order Bitcoin planning with clear allocation frameworks and position sizing and emotional preparation, then check out the link in the description. I help investors build strategies that don't break down when whales move. If you like this explanation, then you will love the next video too. So see you in the next video.